This is probably one of the biggest exercises the Reserve Bank of India has initiated in the recent years to tackle the mounting pile of bad debts in India. The RBI has now come with a detailed discussion paper on how to tackle the bad assets, touching upon the entire aspects of the bad loan management by banks, beginning from the early recognition of stress in the assets, the closer monitoring, the need for continuous evaluation, the, uh, uh, the, the need to identify willful defaulters and keep them out of the borrowers, eligible borrowers list. Thus, RBI has touched upon the entire aspects of the asset management, and it also gives a lot of freedom to the asset reconstruction companies to buy out bad assets and even securitize this to trade among different ARCs. The idea in this discussion paper, which RBI has released today, is to find out a way to cut down the piling bad assets in the banking sector, at least in future cases. But one has to observe that this discussion paper on bad loans doesn't really address the issue of existing stock of bad assets and even an equal amount of restructured assets in the banking system, which is a big worry for the policymakers. About 10% of Indian banks' credit is either bad or being restructured, and the discussion paper doesn't really address this issue. And probably the answer lies with more clearance of policy logjam by the government and faster clearance of projects which the government has initiated but hasn't shown much results as of now. But whichever way, this is a welcome step the Reserve Bank has taken, and a lot has to be done still to control the rise in bad loans as we have seen it.